Hey everyone, this is the Trader Investor. In this video I want to show you how to find trading opportunities using the ThinkorSwim platform. I like the TOS platform because it has a lot of power, and you see in a lot of my charting I use TradingView because TradingView is not as resource hungry when it comes to how much of the your computer resources that it uses. But when it comes down to actually scanning, designing my own tools, indicators, ThinkorSwim is my go-to. I really love the way they're set up. And so today I'm just going to focus on mainly one scan that I use. I call it bottom fishing, and that is to find stocks that have been pulling back and they're about to turn, and that's why I call it bottom fishing. It's not really fundamental analysis where it's been beaten down and it's at the bottom and that's what I want to catch. But for me, it's really a stock that is doing really well and it has been beaten down temporarily to where price is maybe reverting to the mean, or maybe just even having a deeper pullback, so that I get a good buying opportunity to enter long. And you can reverse this scan, and as you reverse it, you can see it for a short position as well. So I call it bottom fishing, and I'll show you the scan, how I put it together. And then we'll come to the chart and I'll show you how the chart is set up. And then from there we'll go to the watch list. The watch list takes the scan, whatever I scan, and as long as you save it, you can have it in a watch list. And I tie my watch list, I like the green. Green makes money. I like green, so everything is green. So whenever I click here, my chart changes accordingly. That way I don't have to retype it. Hence another great reason why I like to use the ThinkorSwim platform. It's really fantastic in terms of that. So let's dive into the scan itself. So let me maximize the screen and go into the scan. So what I like to do is, generally I set a minimum and maximum. The reason why I set a maximum is because some of those stocks above 1,000, the option prices tend to be a little high, especially if you want to do it 30 days out, 45 days out. They're pretty pricey, so that's why I prefer to do it a little bit less than 1,000. And sometimes I might even do $30 minimum and 300 maximum. I like to do that. And then when you scan it, I change this to show 200, so it gives me a good number of stocks. I don't normally get more than 200, but I just like to keep that at 200. Sometimes if I keep it at 50 and there are about 65 or 100 in the selection, I just want to make sure I see all of them so that I can quickly analyze them. And we'll go through the analysis process and how I can quickly identify opportunities. So once I've set the stock, the next thing is I want to look at open interest. The reason I do this is because I want to do options. I want something that has very good option volume. If it's only doing 5-10 contracts a day, or overall for that one strike price, if it has less than 100 open interest, I'm not interested in it, right? Therefore, I say I want to see an open interest of at least 3,000, and that will scan across different strike prices and see which one has at least one strike price of 3,000 open interest. This is not enough, right? But this is just at least, it gives me a way to narrow down my search. And then the next thing that I will do is the volume. So the difference, as a reminder, between open interest and volume. Open interest says what was the closing open volume total interest as of the closing of yesterday, and so it will capture that number, and today's volume will get added to yesterday's open interest to get tomorrow's open interest. Now when I say added, it's not just an addition, it could be also a subtraction. Example, if you have 3,000 open interest and 500 options trade today, out of those 500, if 200 are buys and 300 are sells, then you have net out of the 500, you have net minus 100, because you're selling 300 and buying 200, so net minus 100. So from 3,000 down the next day, you'll have 2,900. So I'll repeat it again to drive the point. If 500 contracts trade today, 200 bought, 300 sold, it's net 100 sold, right? Because more sold than bought. So your open interest, which was 3,000 at the end of yesterday, today it will get that 100 subtracted. It will give you 2,900 when you come back the following day. This is important because if there's not enough volumes, if there's not enough open interest, I'm not interested in that position. Sometimes being able to watch the open interest, and if the open interest keeps stacking up, it also gives me an indication maybe there are some institutions that are believing the same direction that I'm believing, and I want to tag along because they're thinking that this option is going to go in that direction. So that's why I like to have at least 500. Keep in mind, in some of the stocks that do not trade heavily the first half hour or so, this volume might not kick in until later in the day. So, that's a downside to the way that I do it here. But I want to get some of the best, some of the very, very extremely liquid stocks. As you can see from this volume, very, very liquid stocks, right? And so these liquid stocks generally have also liquid options. That's why I'm not too worried about this 500. And most of these, it will hit it the first minute or two. All right, next, average volume. And I will go into how you can add all of these as well. Let me just quickly run down through the different components. I want an average volume of at least 1 million shares traded per day over the last 50 days as an average. If it's not trading this much, then I'm not interested. Again, volume is what drives price, and so I want volume behind me. Next, I want an ATR over the last 21 days of at least 1.1. What this says is I want the stock to move at least $1.10 every day. If it's only moving 5-10 cents on a daily basis, I don't want to capture it in this. Why? Because I need big moves. So this 1.1, I found it to be kind of my sweet spot. I've played around with higher numbers. It narrows down my results and doesn't give me enough opportunities. If I go any lower than that, it makes it too wide and makes my research time consuming. So I found this 1.1 kind of reasonable. You can play around with that just to see. Another thing that I want to look at is there is no earnings. I'm skipping this one on purpose because that is the one that requires the most amount of time. Then I want to make sure that there's no earnings in the next 15 trading days. Why? Because option prices get juiced up as we get closer to earnings. So I don't want to participate. If I'm going long, I don't want to participate in a very expensive, very pricey option price. So this is why I prefer 15 days or more before earnings. Then I can even use this play for an earning run-up. If there's an anticipation that earnings is going to be great, I'll get into position, 5-6 days prior to earnings. Prices are juiced, they're going in my favor. I can exit no matter what it does after that. I don't care because I'm already capturing the the gains that I am after, right? If it does 3, 4, 10 times more than that after I'm exiting, I'm not even looking at it. So that's not the important part. So then the main part of this scan is this custom scan. And we will go into this custom scan quickly here. That one we have to study it. We have to be able to look at it very carefully. So in my scans, and as you know, my trading style, I don't use moving averages for entries or exit. However, for scanning purposes, I don't have any other way, at least I haven't figured out a way to do price action. You know, when I see 2 or 3 lower lows at, you know, swing lows and followed by swing highs, I haven't figured that out. So if any one of you can show me that, I would greatly appreciate it. But for now, what I do is I'll use moving averages to gauge when price is having a trend in one direction and pulling back momentarily, coming to some mean, and then I take advantage of that reversion to the mean or that pullback, no matter how deep that pullback is. So what I want to see is, and when we go into the charts, this will start to make sense. I want to see close is less than the 34 exponential moving average. And I want to see the 55 greater than 89. When these are stacked, the reason why I like them stacked is to show you we have a good upward momentum. If your moving averages are not stacked, then that upward momentum is not there. This is why I like to have them stacked. So 55, all exponential so far. 55 above the 89, 55 above the 200, and the 21 above the 34, but not on the close basis, but on the low basis. On a moving average, you can do the moving average on the high, on the low, or the close, or the open. And for me, I found that when the 21 is above the 34 on the low basis, it's a good spot to find an entry. So 55 above 89, 55 above 200, it's a good upward trend. 21 above 34 is a good upward trend. I mean, you can add more to this and say, hey, I want the 34 above the 55, I want the 89 above the 200, I want the 21 above the 55. You can keep adding, making it more complex, but for me, this is what I use. I want the close to be above the 34, 55 and 89 and 200 stacked. Sometimes the 89 could be below the 200 or above the 200, but as long as the 55 is above both the 89 and the 200, and the 21 is above the 34 on the low basis, and the close is also greater than the 200. Why? Because this shows that we still have a strong upward momentum. If I have a good trend up and price is pulling back and price is not going below the 200, I'm interested. Price going below the 34 tells me, hey, this is an area of value. This is why I'm using this as an area of value. So this is how I am structuring this scan. Pause this video, take a screenshot, study it, take as much time as needed, ask questions, and we'll come back to that. So now that we have set up the scan, we just run it, and we also can just say, hey, save scan query, give it whatever name I want, and save it, and I'll be done. But we already have it saved, so I'm just going to keep it there. Now, how do you set all of this up? How do you start it from scratch, for example? Well, you know, I don't like to start things from scratch, but since I'm not saving anything, I can just show you. You can add a filter, stock, option, fundamental, study, pattern. I use stock, option, and study. These are the three that I use. As you can see, stock, option, study. These are the three that I use in all of my scans. So, add a stock. And what that does is, what do I want to add? Do I want to add bid, close, volatility, market cap, open, price per earning? Anything that I want to add, I can add here, right? This is how you add stocks. So this is how I added this one. And then you add options. And this is how you add the next two, right? In options, you can have here the volume. You can have the open interest. If you have other interest, if you say, hey, I want this kind of delta, or out of your Greeks, if you want to add days to expiration, I want this kind of options, you can do all of those. So this is how I have added these two, so the stock and the options I showed you. And next is studies. This is the last one that I use in my studies. When you add studies, it will default to ADX crossover. I just come click on edit, it gives me this window. I come delete this, and I add whatever condition that I want. And so edit study, if I type exponential, so moving average exponential, I want as an example, I want the 21 is greater than another study, same study, moving average exponential. If I type it correctly, exponential, and I want it above the 89, for example, and click save, click OK. It just got added. That's how you're seeing this part from my screen. This is how I'm adding them. If you know ThinkScript, you can type it here, or you can just do like I showed you, add condition, keep adding them. But if you know it, you can just come in here and just say, and moving blah blah blah. You can just, moving average, right? You can just keep typing it this way. But I'm not going to save this. I'm going to cancel it. But that's how I'm adding them. So I'm going to cancel this one as well. So this is how you add them. Very, very simple. And then just add your conditions, right? Your conditions for open interest, for volume, for stock price. Very, very basic stuff. And once you're done, all you have to do is just save query. And if you've made changes and you like the changes, click save. Sometimes what I do is I will save it under a new name so I don't override something that I have done in the past. So what happened? We scanned, right? We created this scan. We scanned the scan result, bottom fishing in my watch list. Boom, it's here. This is ordered by name. This is ordered by, I don't know what this is ordered by. Let's order by last. Yes, let's order by last. And if you order this by last, you can see that they're the same. MP, MAR, fix, AMCS, so and so. This is how you see it. And so this is how, the only way you can tie your scan results to a watch list is to save it. Once you save it, you just come in here and it will be in your personal. You just come and find your bottom fishing and boom, you have it there. Very simple, right? So the next step then is to come to your charts and say, hey, what are my charts telling me based on the results? So we'll do a couple of them. MP, what we said. So in my charts, as you can see, this is a set, right? So this is, I have the 34, the 21, the 55, the 89, the 200, all in here. So you have to know your moving averages, and based on that, like right now, when I look at MP, right out of the gate, I don't even have to trade this because this is not in a clear trend line. it met the criteria, but it's not in a clear trend line, so I skip it. I go to the next one, right? So Marathon Digital Holding, this is Bitcoin related. So am I interested? I could be, right? I see, oh, you know what, it had a very deep pullback. It's starting to recover, making higher lows, and then maybe slightly lower low and lower high. I might be interested, and I say, well, you know what, I'm going to put an alert here that says, hey, if price crosses above here, let me know. So I'm done with this study because I've seen, okay, it met my criteria. Now, as you saw, I focused on price action. I didn't focus on the moving averages. They were just there to help me with my scan. Now that I see the structure, I say, oh, okay, this is a potential to have a good structure. Alert me, and when I get to this price, if I get there Monday morning, it's one decision I need to make. If I get there 3 months from now, after price has gone all the way down here, then I forget the setup because it's a completely new setup that I need to look at. So it gives me that opportunity. Fix, this one again tells me, I don't know. It looks like a lot of sideways action. I'm not too happy, and I move on. AMC, very, very much a short squeeze play. This is a very small account. When I try to experiment on a few things, so this is what I am looking at. So few different options that I play, but again, this one normally I wouldn't touch it. I would touch it, but in this particular scenario I'm going to skip it. But normally I would just put an alert here and let me know when price goes above there. But again, this is not a particular one. This one I like, right? Like, as you can see, moving averages are stacked. Price has a nice pullback. I might even say, hey, based on this nice pullback, right, price has really been going up and up and up, and has a nice pullback, comes to find support at a nice moving average. So maybe I'll say, okay, give me an alert when price crosses here. Give me an alert here. I'll be interested in. I might, sometimes what I do is I do even that alert a little bit lower, and it says here replace. I'll say yes, replace it. Just let me know when price gets here. So I like this setup because it's been in a good uptrend. I don't like this setup at all. I have no idea what it's doing. I don't like this setup. I don't know what it wants to do. I don't know what I've been studying here. What I have. Let me just do this. Okay, so it was a study I was doing a while ago, but this one very much a sideways action for me. Sideways action. I will get interested down the road, so not right now. So I don't even want to spend more time on this. This one I like, as you can see, nice uptrend, very beautiful uptrend, and price has a momentary pullback, and I could even draw just to add to today's study, just add a Fibonacci retracement, and I'm at the 50%. This is a beautiful area. So Monday morning I have a decision to make, right? Because this is so beautiful the way it is set up. I can say, look, if price comes right above this Monday, I'm interested, right? I'm not recommending, I'm just showing you how to think about this, right? I'm not taking this trade, I'm just showing you how I think about this. Because if price comes here Monday, there is no confirmation of a structure, the down structure being broken, right? For the down structure to be broken, I need to see down, higher, high, higher, low, higher, high. but I can say, well, we came at the 50% retracement, it might be a good place to take a risk, and at the other side of the 50% is where I put my stop. That's a possibility. But so as you can see, this is a strong uptrend, a nice pullback. I have an alert decision time when the market's open. Again, as you can see here, I don't know how strong of an uptrend this is, and this is a fairly new company. Based on the charts that I see, there's nothing going back beyond June of this year, so this is a pretty new IPO or listing. I'm not interested. This one, it goes up in a choppy way, so I might say, you know what, give me an alert here. I like this. I like this not to trade, but to think about. Let me consider if it breaks above this high, which because it's making a higher low, it's going to make a higher high, I might be interested. Right? So I'll just show you a couple more. Why? The reason why I'm going through these is to show you why the scan is set up the way it is set up, right? It's letting me have a pullback within a good uptrend. This one is starting to break structure to the downside, so I'm really not interested in Comcast. Marvel, beautiful uptrend, right? This is beautiful uptrend. So we have this fib retracement is at the 23.6% retracement. I want to see price come down to the 50% area, to the 38% area. So I might just say, hey, I don't want to take a look at this on a daily basis, but let me know if price goes below here. If price goes below certain point, I just put it right above the 38.2% retracement. So if price goes below that, I want to get alerted to see, is there a potential entry? So all in all, and in short, this is how I start the scan, and this is how I go through that list. And I spend time with you because I want to explain to you how the process works, but this is a very, very quick scan for me. So what I do is, once I click here, I don't like this chart, I just click the down arrow key because my mouse is already clicked on that, and I say, if I like a chart, I say, oh, this one, quite interesting. It's pharmaceutical, very, very choppy up and down. There's some decisions that are coming up. 10/27 is earnings. Maybe not. Maybe I'll skip. So eBay, wow, this one, everything intact, everything so beautiful. Put an alert, right? There's no more studies that I do more than this, right? So now I'm going to show you how quickly this goes. You have a list of 30 something, 20 minutes, and you're done. This one, well, look, pulled back, stayed above the moving average. I think this is the I think this is the 89. Stayed above the moving average, and then boom, right? So if I do this, yes, the 200, the 89 is the yellow. So I have them marked, as you can see. So this one is the 8, 13. This one is 21. Then then 34 is green. Kind of hard to see here. Then you have the blue. I think this one is because I am not showing it. That's why I decided not to show the high. I am showing the close. I'm not showing the low. I just don't want to clutter the space. The 55, the 89, and the 200. The 200 is also not showing. My scan already told me price is above the 200. I don't have to visually see it. If it helps you, just add it there, and you'll see the 200 there, right? Same with the 34 low, because it was part of the scan. Just add it there, it'll be there. For me, when I see the blue, I know the 34 low is very close to it, on the low side, the 34 high is very close to it on the high side. So it gives me a good indication. And I have the 55, this purple, and the 89, this kind of yellowish line. So let me go back here. I don't want to see the 200. Just removing clutter, right? Just removing clutter. So price is above the 89. I need to break this structure to be comfortable to go on the long side. So now you see very fast and move. Lightspeed Commerce, I have no idea what they do right now. On a trade perspective, beautiful setup, and it has given us a good 50% retracement. As you can see, price is bouncing off that 50% retracement, bouncing off the 89 EMA. And what will it do Monday morning? Does it cross the 38? Does it give me an opportunity to enter? So this is how fast you can go through these. Really fast. AMD, good rally, and then a pullback. Now I don't like this. The reason I don't like this is it had a pullback, it failed to make a higher high, and it started to make not only lower lows, also lower highs, right? So I don't like this. Even if I break this, I'm not entering because I don't see a good structure and a lot of choppiness. And AMD has been very choppy for me multiple times, not just this time. It has a tendency to go up and then collapse for a while, go up and then collapse. So it's not very friendly to my style of trading. PVH, I don't like this chart. I don't care much for this chart because we're making lower low and price is starting to really break structure. So this is again to show you how it is easy to quickly go through this list and make a decision on, oh yeah, I like this, I'm going to enter it, or I don't like this, I'm not entering it. Right? This is very easy to make. I don't know why I have this alert here. That was from a long time ago. I'm just going to delete them. I don't even remember what they're there for, so there's no purpose in keeping them. But I have applied material. I have the stock itself, and for options trading, I might be interested. But this is so beautiful. I'm not going to do a lot of options trading because I have the stock for long term. If I do options, it'll be to protect my position to the downside. Apple, same, like applied material. I have the stock, so unless I want to protect my position to the downside, I don't always play Apple options. They have not been nice to me as an option, because sometimes you'll see things like this, nice burst move, but sometimes you'll see things like this, oh, I broke structure, I get in, as soon as I'm in, it collapses on me, right? As soon as I get in, it collapses. I get in, it collapses. So there are some things that if it doesn't work for you, stay away. And for me, I just stay away from Apple as options. I like them as stocks and they've been kind to me, so I just skip that. So this is how you do it quickly. This is how you just, down arrow key, and if you don't want to do the mouse key, to move really quick and see which ones you like, which ones you want to set up an alert on so that you can take advantage of those positions, right? That's the main thing. Is there anything that I can take position in that will help me, right? Is there something that, nice pullback? If you want to do Microsoft, is there a nice pullback here? Boom, to enter, right? I don't trade Microsoft options, so I'm just going to skip that, but it's a beautiful setup for anyone who's interested. It is really a beautiful setup. Really beautiful setup. And some of these I don't like Square, I don't like the way it's set up. Nvidia, beautiful. It's giving you a nice pullback, and you see a nice break of structure, believing that you're going to make all-time highs, then you can go above those. So this is how I do my scan. If there's any other kind of scan that you're interested in, leave me a comment in the comment section, and I will show you how to set up those scans. If you have any questions, as always, don't hesitate to ask those questions, and I'll address those as well. So hopefully this has been good to you, educational, informative, and I want to wish you success in your trading and also in how you find those opportunities. They're there, as you can see, the opportunities are there. Do we jump on those opportunities, or do we know how to find them? Here's a scan that I'm just showing you how to find them. All right, everyone, take care for now, and I'll see you in the next video.